Ladies and gentlemen, thank you so much for joining us for the latest of the Confessions of a Business Owner webinar. For those that know me well and those that don't, when you get into business, it's all about having a passion and a desire to serve your community. Unfortunately, when you get a couple of years into business, you can get sidetracked by all the things that come with running a business. So you lose sight of your purpose and your why. And this series is aimed at really digging deep to those people that I'm chatting to understand what their purpose is, what their why is, what's driving them to serve their community, and also how are they serving that community. So I'm absolutely delighted this afternoon to welcome Andy Steele of 360 Chartered Accountants in Hull, who's going to talk to us about how and why you should be looking to access the hidden cash in your business. Andy, good afternoon to you. Could you, just for the benefit of those that don't know, you just give us a quick appraise of who you are, how long you've been doing what you do?
Yeah, thank you for having me today, Gary, and thank you to everyone for joining us. So I'm Andy Steele. I'm the owner and one of the directors of 360 Chartered Accountants in Hull. We've been going for, well, it was our 10th birthday back on the 1st of February when the world was very different. In terms of what we do, we are a firm of chartered accountants, but we do try to differentiate ourselves a little bit from the competition in terms of the products and services that we provide, which I'll come on to shortly. I suppose at the end of the day, what I do is I help business owners, often lonely business owners, ascertain what their life's goals and ambitions are and try and help them achieve it as smoothly and quickly as possible, whether that be earning more money, working less hours, or just having a generally less stressful lifestyle.
And I think that's an important one because, you know, running a business is a very, very lonely place. And it doesn't matter whether you're a startup business, you're an established business, it's often a very, very lonely place. So certainly one of the things I advocate, Andy, is, you know, having that network of people around you. And Sally Roberts, who was on the webinar, I think 2 weeks ago, was talking about, you know, surround yourself with eagles and they'll help you fly. So you are one of those people that you hold the hand of your clients and just help them through often muddy waters, right?
Yeah, many of our clients are single business owners, and whilst many of them have a really good team underneath them, they don't really have anybody to sort of bounce ideas off. So I guess me and my colleagues just provide a platform for them to do that, and I guess that platform has proved to be really, really useful these last 12 weeks or whatever it is now. Because I think many business owners are lonelier, and perhaps even a little bit more scared at the moment than they've ever been, because there's obviously so much going on and so many unknowns. And whereas historically they might have turned to the bank manager for help, there's not many of those around anymore. So I think having an individual who you trust, someone who's experienced in running a business, growing a business, someone who's there for you and understands you and knows your business is key. It's key at the best of times, but right now, I think it's essential.
Absolutely, it's critical, isn't it? And Brian, who's on the call this afternoon, he was the first guy that we interviewed in this series, and he was talking very much about taking the position of a pseudo bank manager because you can't get hold of them at all these days. So Andy, going back 10 years, you're obviously working for another firm. There was a light bulb moment that said, I need to do something under my own steam. I need to set up my own firm and I need to do something differently. What triggered that light bulb moment for you?
Well, quite simply, the credit crunch. I mean, it started, 12 years ago now. And I think during tough, challenging times, you really find out the truth about people that that you're sort of working with. And I was working in a sort of mid-tier, well-known accountancy firm in Hull, sort of 50 odd staff, well established, and I thought I was really happy there. But then when things sort of took a slight turn for the worse, you sort of sometimes see people for what they really like, and I discovered that actually I didn't really want to spend the rest of my life with my business partners. I had loads of ideas about how a modern, forward-thinking accountancy practice should be run. What sort of technology we should be using, how we should be marketing our business, and some of the more senior partners in the firm weren't really up for a change. They were quite happy to see retirement through. Didn't really want to learn any new skills. Didn't want to sort of challenge themselves. And they're fair play to them. They sort of put themselves in a position where they're able to do that. But I didn't want to be a part of it. And I see this so many times with clients of mine. They've sort of learned the trade in an organisation, and then want to go off and do things their own way in a way that they perceive to be better. So the light bulb moment was, I guess, one day when we'd had a particularly challenging partners meeting, and I just made the decision that that's it. I want to go off and do my own thing. So I put a business plan together. Sat down with my bank manager in the pub round the corner over a steak and kidney pie, and perhaps part of me was actually hoping he would say, actually, we can't help you. This business plan's a bit pie in the sky. But for better or worse, he said, yeah, I can see this working. We'll lend you the money. So now I was like, oh God, I'm really, really going to have to do this now. Am I 100% sure this is what I want to do? And I sat down, spoke to my wife, etc. Decided it was. So handed my notice in. Had to work 3 months, which was probably the most difficult 3 months of my life. The partners didn't particularly make my life very easy. It was lots of unpleasant partners meetings, but it was character building. I came out of it a much stronger person than I'd gone into it. And 10 years later, my only regret is that I didn't do it earlier.
And I see and hear this all the time, is that, if you're working for somebody else, and some of us are just not designed to work for somebody else. I was having a conversation this morning with a lady that said, I kept putting all these ideas forward to the partners. She was in a different professional services organisation. She said, I just got to the point where they weren't listening to those ideas. And there became a time where I wanted to do this for myself. And that's really where you got to, is to say, look, I need to build my own business where I can implement my own ideas and I can serve my clients how I want to serve clients, not how they want to serve clients.
Yeah, absolutely. And I thought the credit crunch was coming to an end. I got that massively wrong. It actually carried on for probably another 2 years after we set up, which created other challenges. Opening any business during an economic downturn is a challenge, but I suppose the advantage I had over many businesses that start up is that I did have a small pool of clients who said they would follow me. People that open shops or marketing agencies or whatever it may be with no clients to follow, they're the real brave people, in my opinion, and they're the ones that deserve the support from everybody, really.
Absolutely. So that gave you some momentum. So fast forward 10 years and you've been working with clients through that period, and obviously we've had a tough 3 months. So just talk to me a little bit about this concept of, cash is king. It's a well-known phrase, cash is king, but there is often hidden cash in all, if not most businesses, right?
Yeah. I mean, I suppose everyone's heard the saying, turnover is vanity, profit is sanity, but cash is king. And I think right now, it's never been truer. When lockdown first happened, and many businesses' turnover just dropped to zero, it was the businesses that had cash reserves, but also the businesses that were either able to access funding quickly or could turn assets within their business into cash quickly. They're the ones that survived until the government assistance came along. But it's also those businesses that will presumably continue to survive and be able to hit the ground running when things return to normality. Why is cash king? I mean, you can't pay bills with stock. You can't pay bills with work in progress, and you can't pay bills with debtors. So you need cash to keep your business running, and at the end of the day, to pay your staff. So it's really key that you spend a little bit of time looking at your business, looking at the assets within your business, and seeing if there's any cash tied up. So, I mean, right now we've got a lot of businesses who are thinking, we're working from home, we're working really efficiently. Do we actually need our offices? Do we need a physical place to meet when we can do things like what we're doing right now? So I think you'll find a lot of businesses at the end of this don't go back to their offices, or certainly look at downsizing and perhaps rotating between working from home and working in an office. So it may be that there's businesses sat on expensive leases, or who actually own the freehold in the buildings, that may be actually looking at releasing themselves from those agreements, or selling their offices to release some cash that way. Other areas that you can look at for cash is your debtors. So customers that owe you money. Is your credit control process as slick as it could be? Are you credit checking customers before you extend credit to them? Are you putting them on hold when they don't pay you on time? What criteria should you be looking at before you put customers on hold? Is there a risk they leave you if you do that? Do you want them to leave, or do you want them to stay? What systems have you got in place to chase debtors as they become overdue? It's really important at the moment that your customers pay you in preference to their other suppliers. Many businesses pay businesses that shout the loudest. So how loudly are you shouting, and are you at the front of the queue when it comes to the weekly payment run at the end of each week? Do you know when your customer's payment run is? Have you got notes on your CRM system so you can give them a ring the day before just to remind them that they owe you money? The lower you can get your debtors, the more cash you'll have in the business to use as you see fit. But you're also reducing the cost of chasing those debts and reducing the chances of there being bad debts.
Do you think, I mean, that's common sense to me, but there's so many businesses not doing it. Do you think what happened 3 months ago has forced businesses to chase overdue debt and tighten up systems that might have been relaxed? Do you think it's forced a behaviour that should be standard?
Yeah, I think perhaps during the good times, people perhaps let things slip a little bit. So they perhaps won't chase debts as hard as they would, you know, right now when cash is really tight. They may, you know, when you're busy sort of generating sales and looking after customers, etc., and things are going really well, do businesses spend as much time looking at their overheads, looking at how much they're spending on various things? I know most businesses have gone through an overhead reduction process over the last few months, but you know, if they'd done it a year ago, 2 years ago, you know, they could have saved themselves potentially thousands of pounds worth of expenditure that they perhaps didn't need to make. You know, there's some really easy wins in terms of reducing your overheads. It's very rare we sit down with a client and go through all of the software, all of the subscriptions they're subscribing to, and we sort of don't spot something that they're either not using or not fully using. So it's you know, reducing your overheads is a really quick way of increasing the cash in your business, and the profits, obviously.
And this can be anything from looking at utilities to, you know, alternative insurance providers, you know, a different bank that might have different fees. You know, everything's got an opportunity to be reviewed and reduced, hasn't it?
Yeah, I mean, pretty much every expense line in your profit and loss account, there will be an opportunity to look at. You know, even things like you know, overtime, holidays, etc., in terms of your staff costs. Yeah, plenty of opportunities, and you know, in terms of things that you're buying, you know, your direct costs that you're buying from your suppliers, are you getting the best rates? Are there alternatives out there that are perhaps cheaper without impacting on the quality of the products or services that you're supplying? You know, businesses right now are desperate to maintain sales, so you know, there's some real bargains to be had out there at the moment.
Yeah, absolutely. I had a client recently whose insurance was up for renewal, and I challenged their annual premium, and he said, "Oh, you know, I've known these guys for 20 years. You know, there's no way at all are they going to rip me off." So I got an alternative provider to come in and gave him actually better cover for half the premium. And I said, "Well, these guys, I think, have been, you know, exploiting you a little bit. Maybe you've not challenged them enough." He went back to his incumbent provider and they halved their price without any negotiation. So, you know, he's got his premium down, but I would challenge why, you know, how much he's overpaid over the years by not going through that exercise.
Yeah, some businesses get complacent, don't they? And you know, if they're pretty confident that you're going to renew with them the next year without challenging it because they know you're busy, then you know, some insurance brokers, etc., might take advantage of that. So now is the perfect time to review these agreements that have been in place for several years and just make sure you are actually getting the best deal available.
Absolutely. Andy, you've spent a majority of the last 3 months where maybe some of your competition have furloughed a couple of people, you know, maybe they've not been able to support clients because they're not in the cloud. You know, you guys have been pretty much full on for 3 months, but a lot of the work you've been doing is around accessing, you know, cash grants, whether it be consultancy grants, whether it be loans, looking at, you know, various ways that customers can access cash. What are some of the things that you've been looking at to help them access working capital?
Yeah, so there's lots of support available from the government at the moment, which I'm sure everybody's aware of. They've certainly spent a lot of time, money, and effort promoting all of the help that's out there. But certainly the ones that are probably most readily available are the the 10 and the 25k grants that I think most people that are entitled to them have actually got them now.
Yeah.
With a slight exception for businesses that have perhaps moved into premises just before the lockdown, and they're not actually into the rate system yet.
Yeah.
Because these 10 and 25k grants are all based on rates bills. So businesses with rates bills that are reduced down to zero because they qualify for the small business rates relief get the 10k. The businesses that get the 25k grants are rateable value above 15, less than 51, and they're in the hospitality, retail and leisure sector. They've now brought out some discretionary grants, which are basically aimed at businesses that have business premises but didn't qualify the first time round because perhaps they don't get a rates bill because it's included in their all-inclusive rent payment, or perhaps they were in the council tax regime rather than business rates. For example, if you're a bed and breakfast. So those discretionary grants are being issued by the local authorities. They're all operating at different speeds. Hull City Council, where I am now, has already started making the payments, whereas some of the other authorities, their sort of websites are only just going live. So I suppose the first action point from today is if anybody does have business premises that hasn't yet qualified for a grant, they need to consider applying for a discretionary grant by going on their local authority's website and seeing what the criteria is in their area, because every area is slightly different.
And there's going to be, there's going to be some businesses just don't qualify at all, isn't there? It's not going to serve everybody, and whether that's right or wrong, that's a reality.
Yeah, at the moment, it seems to be the owners of limited companies that have historically paid themselves by dividend. They're the ones that seem to be slipping through the net at the moment. Those and self-employed individuals that have started recently.
Yeah.
There's no assistance for them at the moment either. I suppose there's an argument that you can't help everybody, but owners of small limited companies paying themselves by dividend we're talking about a huge number there, and it perhaps does seem a little bit unfair that at the moment they're not being helped. Boris promised to have a look at that at the House of Commons select meeting thing that he had a couple of weeks ago, but he hadn't mentioned it since. So we live in hope.
Absolutely. Andy, on my travels, I come across many, many business owners, and the one common thing that I see and hear all the time is that they're just not close to the numbers, and it might be that they're frightened of them, they don't understand them, they're scared of them, nobody's educated them. Why is it, do you think, business owners are not obsessive about their numbers, and what are the key measures that they should be obsessive about?
I think some business owners have probably never been shown. I start dealing with some. I'll have a meeting with a new client for the first time, and I'll spend maybe half an hour, 45 minutes going down the profit and loss account in great detail, comparing it with the previous year. We'll look at the balance sheet. We'll try and get an understanding of what the balance sheet's showing. What's the outside world going to think when they have a look at your balance sheet after it's been filed at Companies House? What impact is it likely to have on your credit rating? For me, these are all just standard things that every business owner should understand about their business. But the number of times I sit with someone for the first time and they say, well, I've never been explained that. I didn't know that's how a credit rating was decided. My previous accountant, he told me how much profit I'd made, what my tax bill was, and here's the invoice for the work I've done. So I think a lot of it's down to them not being educated by their accountants and other sort of advisors that they're working with. But also they're busy, and busy business owners have a tendency, rightly so, to concentrate on doing what they need to do to get the next sale, get the next payment in, etc. So we try and encourage our clients to blank out, half a day, ideally a month, but if not a quarter, to spend some quality time with us, analysing the historical financial information, but more importantly, looking at the sort of the projections for the next few months. And what we're projecting for tax liabilities, what's going to happen to the cash, what's going to happen if we grow, what's going to happen if we contract. I'm just getting into the habit of regularly taking a step back from the business and seeing what has happened and what's going to happen going forwards. It's an investment that, in my opinion and many of my clients' opinions, is one of the most important investments that you can make in a business, is understanding your numbers and your figures, and what's my business worth? How does that correlate with the amount of money I want to get when I exit in 10, 20, 30 years? And what can I do to make sure that I get what I want and what I need upon exit?
Do you think that, let's say there's a lack of awareness with a new startup business owner for whatever reason, do you think they're not educated because they're not asking the right questions? Or do you think they're not educated about the numbers because they're buying accountancy on price, not value, and therefore they're not paying for the accountant to educate them?
Yeah, I think probably a bit of both. Some accountants are just there to keep their clients compliant. So, making sure that they hit all of the necessary filing deadlines, make sure they pay the correct amount of tax at the right time, which is perhaps fine for some businesses, some lifestyle businesses, that might be all they need. But for business owners that want to grow their business and want to maximize the cash that they're going to get when they ultimately exit, they need to be investing in much more than a simply compliant service. They need to be investing in, good advice, forecasting forwards rather than looking backwards.
And is that part of your role, to educate business owners why they need that additional service? Because often, and I hear it all the time, my accountant costs me £100 a month. Can you do it cheaper? Is it incumbent upon the good accountants to educate why they should be paying a little bit extra than just compliance and getting that advisory support?
Well, yeah, I think the same applies to any professional services business. If you're on the assumption you don't want to compete on price, you've got to explain the benefits of partnering with your business. Paying a premium compared with ABC Limited that you could probably find on the internet quite easily. I guess this is down to properly marketing the business and sitting down with your clients and your potential clients and reminding them why you are not the cheapest out there.
No, absolutely. There's a question come up in the last few minutes. So, and this goes down to, I think, Brian was asking the question, and Mike has really, reiterated this. So Mike's business turning over 3.5 million, not qualified for any grants whatsoever, no discretionary grant or anything. Why do you think the government have you know, they're not paying owners of small limited companies. Why is that?
I think they're worried about the it's potentially open to abuse. So, you know, because dividends tend to often vary, depending on how well the business has done. I suppose there's a worry that it could be abused if the government were paying a percentage of business owners' dividends. I keep harping back to the fact that if there is a business that doesn't qualify for any grants or doesn't qualify for furloughing the staff or the owners, they keep reminding us that there's Bounceback loans and Sybil's loans.
Yeah.
You know, they want those businesses to borrow themselves out of trouble.
And that's great, because I don't think there's going to be any money as cheap as those Bounceback loans are right now, particularly when, you know, there's limited or no personal guarantees. But that's open to abuse as well, isn't it? Because, you know, I've heard stories of people getting the Bounceback loan and going out and spending 20 grand on a caravan, or, you know, booking the holiday of a lifetime. So that's open to abuse as well, isn't it?
Yeah, I mean, it does have to be paid back.
Yeah, of course.
Now, how closely the government will look into any companies that fold immediately after or shortly after receiving a Bounceback loan or a Sybil's loan with no personal guarantee, time will tell. You know, and I think there's also been accusations of some companies abusing the job retention scheme. You know, the furlough grants.
Yeah.
Are all of the staff that are being funded by the government genuinely sat at home and not working? And again, time will tell how closely HMRC looks into these sort of things. I think at the moment they're just desperate for as many businesses to survive as possible, and for as many businesses to limit the number of redundancies that they're making. I suspect that, I mean, they've got to be aware that some of the schemes are potentially being abused a little bit. Are they going to be bothered if a small limited company employing 5 staff, you know, allow a couple of members of staff to do a few hours work whilst furloughed in order to keep that big customer happy? I suspect not. But, you know, if there's larger organisations that are systematically abusing the furlough scheme, I suspect HMRC will find out about it and probably have a good look at them further down the line.
Yeah, I think the reality is, for me, there's 2 issues here, and you know, one cemented by a comment from Martin here. But, you know, the government have obviously spent a lot of money with all of these grants and these schemes and furloughing and all the rest of it. And if there's an opportunity for them to get some of that money back because people have been systematically abusing it, then I think inevitably they will try to do that. But, you know, Martin said something here which I think I absolutely agree, because, you know, many people today will have suffered, but they're looking after the employees, but not the business owners that are actually creating the jobs for the employees.
Yeah, there is assistance for self-employed individuals under the self-employed income support scheme. They've been given a grant, and they're going to be able to get another grant in August. So self-employed individuals employing staff have been helped, but those that have chosen to do it through a limited company and pay themselves via dividend aren't being helped at the moment.
Yeah, so I think they're going to have to consider it at some point. Otherwise, the ramifications are going to be very, very difficult. Andy, you know, we talked a little bit about some of the numbers that business owners should be obsessing about, and why cash is king and how they can access that hidden cash. You know, if we're going to start educating business owners what they should be asking for from an accountant so they're not left high and dry, what, in your opinion, should a business owner be asking for? What do they really want, rather than a compliance service that doesn't expose them to the numbers and the performance?
Yeah, so clearly they need to be compliant. So they need to make sure they're hitting deadlines and paying the correct tax, etc. But also, really, under any climate, but particularly at the moment, you really need to be getting monthly, timely, real-time management information that shows you how the business has performed, what profit has it made, which product lines or which types of services are contributing the most to the bottom line. Are there any products or services that are actually, you're making a loss on? I think every business should always have a budget, but right now I think it's criminal to not have any sort of forecasts. And it's really difficult forecasting at the moment because who knows when things are going to return to normal, etc. But what you can do is, you can do a worst case scenario, which for some businesses will be zero turnover. What does the profit and loss account look like with zero turnover? What does the cash look like? What do we need to do to make sure we survive for the next month, 2 months, 3 months? And then tracking actual v budget each month and investigating why things are over budget, why are things under budget, what have we done well, what have we done badly, what behaviours do we need to change in order to hit our targets going forwards. Forecasting tax liabilities is really important, and clearly making sure those tax liabilities are as low as possible. And then perhaps when things return back to normal a little bit, you've got to know how much your company's worth, and you've got to know how much you need in order to exit on day Z, whenever that may be, and what things can you put in place in order to increase the company valuation, and what sort of a team do you need to put into your business in order to maximize the revenue you're going to achieve when you retire at some point in the future. Basically, it's a really close working relationship rather than, which is what I've alluded to previously, a once a year meeting. This is how you've done. This is your tax bill. Here's our bill. See you next year. We see ourselves as a really integral part of our clients' businesses. And the clients we work best with are ringing us up on a weekly basis to ask us our opinions on various things, not just financials, but recruitment, marketing, what the competition are up to, asking for our advice on safely reopening their offices post coronavirus, all sorts of things. I'm always getting asked questions that I don't know the answers to, but I generally know somebody who will know the answer. So yeah, close building a really close working relationship rather than a once a year transactional arrangement.
Because you understand how their business works, how they work, what they need personally and business wise, and you can correctly advise them. You can't do that if you're sat in a remote office. Can you?
Yeah. And what their dreams and aspirations are, and what it is that's causing them the headaches. One of the questions I always ask my clients is, what's keeping you awake at the moment? And you obviously get a whole host of different answers to that. And it's not always to do with business. It's not always something I can help with, but it often is.
No, absolutely. I think that covers the main questions I've had. If I just want to open it up to everybody that's with us this afternoon, have you got any particular questions for Andy around what you should be measuring, how you should be measuring, how you can access the hidden cash, what you should expect from your accountant? Has anybody got any questions at all that they want to ask?
Just looking back at Mike Roberts' observation that he hasn't qualified for any grants. I just wondered if he looked into the discretionary grant. Yeah.
Yeah, I think Mike had said earlier he had just struggled to access anything at all.
We applied to Kirklees, who we fall under, for this discretionary grant, and apparently bed and breakfasts and everybody else come further down the line or in front of us. And we were told after appealing it, if there's any cash left at the end of all this, we may get something, but it's doubtful.
Yeah, that is the approach that some of the councils have taken, whereas our council have decided to just look at every application on its own merits and haven't given priority to any individual sectors.
It's unfortunate, but it is what it is. There's nothing we can do about it. They're the rules, and
Absolutely. Anybody else got any more questions?
If you Google Enterprise Nation £5,000 grants, that's something that's going live up north. I think it's the end of July. They're opening it up in different geographical locations. So it's opening up in the north shortly. And they're just grants for any business that hasn't qualified for any other grants previously. Don't know anyone that's applied for it yet because well, I don't know anyone that's applied for it yet, but time will tell in that respect.
Thanks, Andy. Thank you.
Okay.
Absolutely. Yeah, there's here talking about Enterprise Nation. I mean, there's tons and tons and tons of grants available for growth, isn't there? You know, for businesses that have tapped into Bounceback loans, you know, there's still grants available to access to help with consultancy or growth or strategy planning, whatever it might be.
Yeah, Brian's mentioned overdrawn directors' loan accounts. I think what every business owner operating through a limited company does need to think about is whether or not continuing to pay themselves dividends is the correct approach, because you can only pay dividends out of retained profits.
Yeah.
You can pay salaries irrespective of whether you're profitable or not, but not dividends. So overdrawn director loan accounts or illegal dividends are going to be a big issue for the next 6 to 12 months. And any of the unscrupulous business owners that we mentioned earlier that are perhaps thinking about spending the Bounceback loans and then folding their companies, they need to be really careful about dividends and overdrawn director loan accounts, because if there are any illegal dividends or overdrawn director loan accounts, somebody's going to come looking for them.
Absolutely.
Need to be very careful.
I think there's going to be repercussions for the next 12 months or so, for sure.
Yeah.
Andy, I think that covers most of the questions we've been asked.
Brian's got his hand up.
Go on, Brian.
Brian's got his hand up. Can you unmute, Brian?
Oh, I'm off mute. Sorry, I didn't realise that I could take myself off mute. Andy, I'm kind of interested to learn what feedback you're getting from the business owners that you're working with in terms of their views on what the future actually holds for business in the United Kingdom at the moment. People being really positive about it. You know, do people think they're going to need more funding later down the line, which I think is going to be a challenge unless it's asset backed, to be honest with you. I'm just trying to get a flavour as to what your findings are at the moment.
Depends what sector they're in, to be honest. You know, that we've got many clients in the hospitality sector that are very, very worried.
Yeah.
Can't see how they can make a profit, particularly under the 2 metre social distancing rules. They won't physically be able to get enough people in their premises safely to break even, never mind make a profit.
Yeah.
So hospitality sector, obviously a very, very.
Although weirdly, Andy, I'm just working on a deal which should complete at the end of this month for just short of £2 million. for somebody that's buying into the hospitality sector, businesses that have gone into administration already, and they're just buying them.
There will,
and
there will be bargains around.
the half price, 50%, 50%.
We've got many clients that are doing really, really well at the moment. There's a lot of people sat home earning between 80 and 100% of what they used to earn, but they've got no money they've got nothing to spend the money on. They're getting refunded for holidays. They're not having to. They don't need spending money for the holidays this year. They're getting refunds for weekends away, gigs, sporting events. So there's a lot of really cash-rich people around at the moment, and a lot of our clients are tapping into that. So particularly business to consumer, they're going back to customers that have bought things from them previously and reminding them that they're there, or remember that wedding that we photoed and videoed for you 10 years ago. You could only afford the photos. Well, I've still got the video. Do you want to buy the video now? There's lots of business, as is always the case when the economy takes a nosedive. There's always clever business people that take advantage of it and do really well out of it. Personally, I think when we do return to some semblance of normality, I think we'll have a little boom as people start spending the cash and moving house and booking holidays, etc. And then at some point we've got to tot up everything that we have spent as a nation, which will be an horrendous amount of money, and we're going to have to work out how it's repaid.
Well, I read a really useful analogy on that, actually, just to conclude, which was, just imagine, Andy, that you're going out tomorrow. You're going to take credit cards out in your name and your wife's name. You're going to take credit cards out in all your kids' names, then your grandchildren's names. They might not even have been born yet, I don't know. Then your great-grandchildren's names, and you're getting all those credit cards tomorrow. And then on Wednesday, you're maxing out on every single one.
Yeah.
That is the extent of the debt.
Yeah.
And it won't just be our generation that pays for it. It'll be future generations that are paying for it long after we're gone. That's how something I read by a leading economist had written that, whose name escapes me at the moment.
Yeah, they've obviously decided that keeping the workforce available and ready to hit the ground running is more important than having several million added onto the unemployment figures. But that could still happen, furloughs ending 31st of October. Unless hospitality is back to normal on the 1st of November, it's difficult to remain positive about the unemployment figures.
Yeah, I think what this has taught me is the importance of working with and having relationships with professional people in every single field. Accountants, who would have known all these initiatives that were going to be launched, and where'd you go for help on that? You've got the likes of Gary, from the mentoring, the coaching side, and then the marketing side as well. And I think this has made a lot of people sit down, reevaluate the businesses in every single area. And you know what? I think we're going to witness some real success stories. There will be another Elon Musk coming from somewhere, another Richard Branson. All these people come from somewhere. So actually, although the debt level is really, really high, I'm quite positive about it. Yeah, there will be casualties, but I think the future is much different to what it was 10 years ago. We just haven't got the supply curve and the demand curve meeting one another at the moment. 10 years ago, there just wasn't any money. There is now.
Yeah, absolutely. And I think if I can just add to that, the whole point of these bounce back loans is that businesses can invest in that growth. Where they've suffered in the last 3 months, it's about investing in growth. Now, whether it's accountancy, whether it's marketing, whether it's mentoring, whether it's a piece of kit, the only way that we're going to get back on the straight and narrow from where we were 3 months ago is to invest in growth. And you're absolutely key, Brian. We covered it earlier. There are plenty of professional services out there that can help you on that growth. So choose wisely. Choose very wisely. Andy, last question for you, if I may. Where is the best place for people watching this live or on replay to get hold of you?
Well, I'm on LinkedIn, so you'll be able to find me on LinkedIn.
Yeah.
I think, am I right in saying there's an email going out when this
Yeah.
is finished, and my phone number will be on there?
No, what I'll do is I'll put a link to your LinkedIn profile on that if you want, and then people can contact you that way.
Yeah, if anyone has got any other questions, perhaps they didn't want to discuss it in front of everybody on the forum.
Yeah.
Please feel free to connect with me on LinkedIn, send me a direct message, or send me an email. If anyone wants to make a note of my email address, it's just Andy@360 the number accountants with an S on the end .co.uk. More than happy to help. Or we produce it was a daily update, but there's not been as much to talk about recently. It's more of a weekly update now, which summarises all of the business support that's available from the government at the moment. If anyone would like a copy of that, they can find it on our social media, or send me an email and I'll send it through to you.
Yeah. Andy, just a quick question from Justin Cadbury, if I may, and just keep the answer very quick, if not a one-word answer. Do you think there should be phased-in levels to allow you to get workers in the company back part-time?
Well, you are allowed to bring fair load workers back part-time from the 1st of July. And in fact, HMRC published their guidance on how that will work on Saturday. My wife wouldn't let me read it, so I haven't had a chance to look at it yet, but I will be tonight. So I'm conscious of the time. Is reducing in that they're no longer going to be paying employers' NI or employers' pension costs for fair load staff. From 1st of September, it reduces from 80% to 70%. And from 1st of October, it reduces from 70% to 60%. And as I said, it ends 31st of October. And last Tuesday or Wednesday was the deadline for furloughing new staff. So nobody new can be furloughed now.
Absolutely. Andy, thanks. Listen, you've shared some absolutely fantastic insight. Some of the comments that we've had have basically said that we know it's tough times for many out there, and being able to understand how to access some of that cash that's tied up, some of that cash that's available to them is critical. So you shared so much great insight. So thanks to everybody that's joined us. Hope you've enjoyed it as much as we have. Really just understanding what's driving Andy and his team and how they're supporting their business owners. Next week, same time next week, I'm talking to Tanya Diggory of a company called Karma, and she's going to talk to us about managing anxiety through challenging times, because running a business is tough at the best of times. It's particularly tough in the current environment. So she's going to help us understand how we can identify anxiety, what that looks like, and how we can start to manage, reduce, and overcome that anxiety that comes with challenging times in business. So details of that will be on the email that comes out tomorrow, along with the recording of today's call. Thanks again everybody for joining us. Thanks ever so much, and take care for now.